All right. Matt, the mortgage guy. In today's video, I'm going to talk to you about mortgage interest rate forecast for 2022. What to expect for mortgage interest rates. Should you lock or should you not lock? What is going to have the most impact on rates? What the Fed's going to do, what political and economic uncertainty is going to do for interest rates, and that coming up, what you should do and what you should expect in 2022 when it comes to mortgage interest rates. All right, Matt, the mortgage guy, at least your ninth favorite mortgage broker on the YouTubes, coming at you live. Want to tell you my thoughts, my predictions, what I'm seeing, what I'm hearing, what you should expect with mortgage rates, because it's such a popular topic. And as a mortgage broker, you can imagine a lot of folks want to know what's going to go on with mortgage rates. I like to keep it simple. I like to explain to you in simple things that you can understand, how my simple brain understands it, what's going on with different things and how it's going to affect mortgage rates going forward. You can look at all the smartest minds at National Association of Realtors, at Fannie Mae, at Freddie Mac, everywhere. They already missed on their 2022 predictions. When I just looked back and read some of them that said, hey, by Q2, mortgage rates might be at 3.5%. Well, that ship friggin' sailed, right? We're already at 4%. So now from March to the end of the year, what do we expect to see from mortgage rates? Here's what I see and what I think people should expect. Mortgage rates have to increase. Jerome Powell and the Fed know that in order to tame inflation, they're going to need to get aggressive. They're going to up the Fed's funds rate in March. It now looks like it's going to be a quarter from all the things I'm reading and hearing. As they continue to click up that Fed funds rate, as they continue to let mortgage-backed securities fall off of their balance sheet, that's going to have interest rates going up. That's what they're trying to do. Jerome Powell talked last week, and I listened to a lot of it. He understands he can't control the supply side, right? He understands that real estate's a problem. He understands that, 15, 20% home price appreciation isn't sustainable. The only control he has is if he raises rates and it cools off demand. The demand side is where he can have an effect. He knows he can't affect supply side, right? So they've said it over and over and over again. They're trying to raise interest rates. They're going to raise interest rates. They want to quell inflation. They want to quell demand so that, the supply demand imbalance in real estate, starts to calm down. So I would expect, if you're buying in 2022, and first I'll talk about lock versus not lock. Rates have been so volatile, sure, we've got the economic and political uncertainty. I'll talk about that in a little bit. But more often than not this year, week over week, we're getting worse, right? There's been way more worsenings. There's been these little glimmers of hope where rates get better for 1 or 2 days, right? And by better, I mean very minimal change, a eighth of a percent on interest rate at most. So if you're buying in March, April, May, June, July, if you've got a new building contract that's closing in 90 days, if you like it, lock it. That's been my stance for this whole year. It continues to be my stance, even more so now than ever. Rates are volatile. Do not gamble. Everything points toward interest rates going up, right? Like I just talked about, the Fed, who probably has more control over this than anybody else, has made it very clear. Their mandate, what they're doing, all the actions they're taking is going to drive mortgage interest rates up, right? So on the whole subject of political and economic uncertainty, all the stuff that's going on in Ukraine, bless those folks. It's really a terrible situation. I'm not going to speak to that. I'm just going to speak to how it's going to affect interest rates. In general, when there's uncertainty, interest rates come down. Right now, the fact that we've got so many forces pushing interest rates up, that even with, the world being in wartime with Russia and Ukraine, interest rates are still going up, right? That's a sign that there's a lot of upward pressure on interest rates. Hopefully there's some peace talks. There's some stuff that, some stuff gets resolved there. When it does, I think that allows interest rates to rise a little bit more and a little bit faster. And so the fact that they're not going down or even staying put is a clear sign that we've got a lot of upward pressure on interest rates. So that is going to be something to watch out for. The fact that we're seeing as much inflation as we're seeing, and truth be told, a byproduct of what's going on overseas is that oil prices are going up. Oil prices are going to translate into more inflation, right? As a barrel of oil goes from 132 to 150 and 2%, 3%, 4% gets added to that CPI number, inflation number, that's going to be more and more pressure on Jerome Powell to say, holy moly, we don't want to let inflation get out of control. Look what we did last time when we called it transitory. Look what happened last time when we tried to ignore it. It went bonkers, right? So I think that not only is these interest rate hikes that he's already talked about, they're all pretty unanimous that there's going to be multiple Fed funds rate hikes at these Fed meetings. Along with that, there's going to be other stuff going on with monetary policy, letting the mortgage-backed securities roll off the balance sheet, all things that create higher interest rates, right? So if you're a betting person, do not bet for interest rates to go down anytime soon. You should expect the opposite. You should like it, lock it mentality, I think, for the foreseeable future. I've followed closely and I follow multiple experts for different points of view. There's not anybody out there that's saying if you're 30 days out, 45 days out, or 60 days out from a home purchase to risk floating it. You just lock your interest rate. Coming into Q2, all the people at the beginning of the year said, oh, we might be in the mid threes by Q2. Well, we've peaked above 4% for the most part. For the best qualified with minimal points, you're probably at 3.99, 4%. But if you've got not so great credit, if you've got other factors involved, you're already into the fours. I think based on everything I'm seeing, 4.5 is not that far away. I would not be surprised if we saw 4.5 before the end of Q2. If we saw it in Q3, I'd probably expect it by Q3. I'd expect 4.75 to 5% by Q4. Is that terrible? No. Is it needed? Likely, right? All this stuff that's going on with inflation. As easy as monetary policy was, as much as we had this money flowing and, March, April, May 2020, when, all the things that the Fed did to ease policy to make money and lending easy, right? There comes a time where we have to reverse course, right? So, was that April of 2020 where rates just went down, relatively fast, the days of easy money. I'm sorry, folks, that's over. But you're still getting it sub 5%. For a lot of folks, you're still getting it sub 4%. So, take this while it lasts and know that, there's not anybody, myself included, that's predicting anything but rising interest rate environment for the foreseeable future. If you want me to put a specific number to it, like a lot of folks do, like I said, middle of the year, 4.5, Q3, 4.75, by the end of the year, somewhere in that 4.75 to 5% range. I think that's a reasonable guesstimate. And, there's plenty of stuff that you can watch. The Fed and what they do with monetary policy is certainly one of them. Economic uncertainty and all that, it's going to tamper for the short term how fast rates are going to rise, but it can't do it forever, right? So if you have any questions at all, you want to reach out to me and my team, get yourself pre-approved, talk buying investment properties, whatever it is. GreatMortgageBroker.com. Go fill out a form. Let us know where you're at, how we can help. We are more than happy to. And we're going to look back at the end of this year. I'm either going to be a genius or an idiot, but either way, We gonna see. Take it with a grain of pink Himalayan salt. Anything I say. I'm just some dude on YouTube, right? Happen to write hundreds of millions in mortgage loans, but that's besides the point. Just some dude on YouTube. We gonna see.